This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to the TF Metals Report weekly podcast highlights for the first week of March 2021. Remember, these podcasts are just a part of what you receive on a daily basis at TF Metals Report. All of it for just 50 cents a day. Please visit tfmetalsreport.com/subscribe to find out more. We began the week back on Monday, March the 1st, discussing COMEX Gold and the possibility of more price weakness in the days ahead. Gold remains going down. I thought I would show you this. Now, this is all the way back to the 1st of last year. There are a number of things on here that are distressing. I mean, look, we're at 1720. Look at that little candle back there in April of last year. And we're below that. So you could say, look, we're at a lower price than we were on April the 9th or whatever that is of last year. You could also go back to March the 9th of last year when price first tapped $1,700 for the first time in 6 years. So from March the 9th last year to March the 1st this year, price is up 1%. Yeah, that makes sense, doesn't it? Oh, man, it's just maddening sometimes. If anything, you can see where price was riding the 50-day and finding support all the way up until September, and now keeps getting plunged below the 50-day and finding resistance ever since. Here's our familiar flag that we show you almost every day. And as I mentioned back on Friday in Beer with Turd, the concern that I have is that now that we are substantially below that red arrow that's kind of in the middle or so of the flag, well, when we fell below the red arrow back in September, we fell to that low in late September that established the lower boundary of the flag. Tried to break out in early November, got smashed below on Pfizer Day, and then fell all the way down the end of November, again, to the lower boundary. Tried to get above beginning of this year, traded sideways, and now we're falling below again, which means, I think it's logical, at least, to be concerned that we might fall to the lower boundary again. If we did, you can see where that is as of now. You can see where that might be before we get to the next FOMC meeting in 2 weeks. Around 1665. Well, what's 1665? And I went back, and that's why we have this chart that goes all the way back. Now, this is daily nearest. Okay, this is a daily front month continuous contract, if you will. See the blue line there in April, May, and June with those lows? That is 1665. And so I put a little extension of that blue line over there to see that that's also about where the blue boundary arrow of our flag will be by the middle part of this month. Do I want us to go to 1665? Hell no. I'm in bad enough mood as it is, and I'm thoroughly exhausted after 7 months of this. But I'm just telling you, the way we've traded in this flag since early August, you sure would think there's precedent to fall to the bottom part. And again, if I'm right that the news might come and the trend might change with the FOMC meeting, then maybe we get down to that blue line, and 1665 certainly would make some sense. I was called away on some family personal matters on Tuesday, March the 2nd, so there was no podcast. But we were back behind the microphone on Wednesday, March the 3rd, and our focus turned to the dollar index and what the chart might be telling us. The similarities in this and the dollar, I don't even know. It's remarkable, right? Remember we've talked about whether this has been a managed decline in the dollar ever since QE to infinity began, because there was we fell down after QE to infinity began in March, and then it was a $2 point range for a while, and we crashed. Then we had a 2-point range for a while, and we crashed. Then we had the left-hand side 2-point range on here between 92 and 94. Then we crashed. And now we're basically between 89 and 91. I know we haven't been to 89 yet, but I think that's the level. Look at the similarity. I don't give you the beginning part from August or so in the dollar index here. But just look at the similarities of this. 3 months on one side, 3 months on the other. Notice there's a spot in September, 1, 2, 3, 4 days that we traded above 94. There's a spot a month ago, 1, 2, 3, 4 days where we traded above 91. Then you came down, kind of found some support at the 50-day, went below the 50-day, got back above the 50-day, and then 1, 2, 3, 4 days banging up against 94 again. Look where we are now, 1, 2, 3, 4 days, banging up against 91. What's going to happen tomorrow? Look at that big crazy candle in early November. That was election day. Okay? Where we went way up, came out, all that kind of stuff, and then fell even further later that week, and that's when gold was soaring. Again, this is where the straight up, gold's just the inverse of the dollar index. Oh, really? So back in, when we were at the bottom near 92 in early November, November the 6th, remember gold was 1950. Now we're at 91 and gold isn't even 1750. So don't give me this gold is just simply the inverse of the dollar crap. Anyway, what's interesting though is how this is almost identical. Let's see what happens tomorrow. Wouldn't it be interesting if on Powell's speech the dollar crashed like it did on election day, went back down near or below the 50-day, and then followed that on after BLSBS on Friday. Then you got another couple weeks after that, which would lead up to the FOMC. Anyway, I just think this is fascinating how almost identical those two periods are. However, on Thursday, March the 4th, Chairman Powell thoroughly frustrated and disappointed all the markets by really saying nothing, holding off on any new plans for his Fed because he knows the game is almost over. Their toolbox that he references almost every time he appears in public is almost empty. The only thing left is yield curve control, and he's proven to be reticent in wanting to roll that out. That was certainly showed in his appearance at the Wall Street Journal on Thursday, and we spoke about that in our Thursday podcast. All right, here's that S&P chart I told you. This is just a reminder of last year. Again, Fed formally changed policy June of last year, kept cutting rates every 90 days or whatever, and it was a steady, nonstop rise from beginning of October of 19. We're at 3,000. We're up 10%, 4 or 5 months later, and everything was just fine on Friday, February the 21st. Oh, maybe the market was down a little bit. It had fallen toward the end of January, too. But up there, that's 33.38. is where the S&P closed on Friday, February 21st. And then it finished up at 23.05 4 weeks later on Friday, March 20th. That's a drop of 31%. And then you know what happened? Before the market could open on Monday, the 23rd, they announced all that stuff. QE to infinity, everything goes with it. And initially, the reaction was not so great. And then everything took off from there. Is it going to take a 31% market? Is it going to take the Dow going to 20,000 again? We're about to find out. And on Friday, March the 5th, our focus returned to gold after some early morning weakness that took gold all the way down to what we see as support near 1680. Gold recovered. The shares recovered as well, and the bond market bounced back too, leading to some hope for the first part of next week. There are some levels to watch that are clearly defined on this short-term chart, and we covered that as part of our Friday podcast. All right, this is the only chart of gold I wanted to show you because I just think it is so interesting. How's that for a word? Almost as if drawn purposefully, as if somebody was running a computer program that managed to make this happen. How is it over the course of 1, 2, 3, 4, 5, 6 trading days, there are 1, 2, 3, 4, 5 30-minute candles that align perfectly in a line? How about that? Well, it certainly gives us something to watch on Monday. Like I said, the way the shares rallied, the way the bond market rallied, dollar due for a pullback. Let's watch this arrow on Monday. Really, if we could trade above 1,700 to 1,710, hell's bells, we'd finally break this, and that would be at least a first baby step. So anyway, I thought that chart was, again, interesting. Thanks again for listening to the TF Metals Report weekly podcast highlights. Again, more information about a subscription to TF Metals Report can be found at the tfmetalsreport.com website. That address, www.tfmetalsreport.com/subscribe. Again, thanks for listening and have a great weekend.